So we've learned what market structure is and what it's all about. We've learned the basics of what market structure is. Now it's time to go into the advanced market structure where everything is broken down into the swing structure, the minor structure, and the stop structure. So stick around so you get a better explanation of the advanced market structure too. With that being said, let's get into it. And if you've not liked or subscribed to this particular channel, I urge you to do so for more videos like this.
All right, so welcome to another episode. All right, today we're going to talk more on market structure. Basic, basically, we're going to be referring to the advanced market structure. All right. Now, last video or last session, we talked basically on the basic market structure and explanations of the parts of the basic market structure which we named as the advanced market structure. Now we're about to break down the advanced market structure. In other words, we call it the Algo market structure. So the basic market structure to teach us that when in a buy scenario, right, when market gives us this little break right here, market would always come back to the higher low, right, higher low, and excuse me, the higher low, and take out this higher high and give us a new swing. Then according to the advanced market structure explanation we had, this was the swing structure right here. Now because this higher low has been taken out, then the swing structure moves over to this place. Alright, so that's like I said also at the end of the video, that's just the tip of the iceberg. So we're going to explain it, right? Now, this basic market structure is something that has been taught to us before. It was taught to us in a way where we basically didn't know what the smart money really does, or in other words, we didn't really know what price was coming to do. Now, I'm going to break it down in such a way you understand. Algo market structure, right, teaches us, let's change it from the higher low and higher high terms we're using. Let's use the A, B, and C, right? So algo market structure teaches us that this is the higher high, right? Markets, it teaches us that most of the time, not I don't want to say most, almost all the time, right? All the time, market would come or price would come and take away this low, right? Take away this low before buying, therefore making this low something called this low here, something called liquidity. Now, what happens here? There are stuff, but you know what? This will be explained in the video of liquidity. There will be a class specially made for liquidity. But here, I want to explain market structure to you. Market will always come and take this out. Now, this may apply in plenty scenarios, but we'll get to the scenarios or the types later, right? So when market comes to or price comes to take this place out, when price comes to take this particular spot out, what does it do? It taps into a lower price down there, in the sense that this is how it's going to look like, right? Something like this. Then this. Look at this. Exactly. Something this way. Now, you as the retail trader or you as a regular one, you think, oh no, because this swing here, this particular swing here has already formed, this swing got formed, then as because it is formed and there was a new swing that presented itself, right? There was a new swing structure that presented itself. So as a result, this particular swing structure is invalid. No, my friend, this particular swing structure will be the one that will be invalidated by market coming to take it out. Market comes, takes it out, takes out this place and goes. Now let's name the lows and the highs of this place. Let's name the lows and the highs first of all. So this place becomes your A, right? This becomes your B, and the swing itself becomes your C. So here becomes your C. right? So 9 out of 10 times, because the market, you never really brush up with the market, right? This is what really happens. This now is your swing structure. This is the low, this is the full swing structure. This becomes the swing structure. Do you see this now? This becomes the full swing structure. But the place you would think the actual low is here, right? Market would come, take it out, tap into the lower one and move to the upside, which you do not want to be at this point, because your entry will be somewhere here. All of us are falling for this. I are falling for this. Initially, when I started, I didn't know where exactly price was coming to buy or buy to, right? Having to understand this, having to understand where price is coming from, price is going to. I won't say where price is going to, but where it's coming from and where you shouldn't be is a key thing in the market. It's very, very key. And that is what the algo market structure will teach us, right? It is there to show you that, oh, this particular spot is a, should I call it a fake area to buy, right? It's it's a fake area to buy, right? It's liquidity. Let's leave it at, right? So A, right, is your swing low, is where you want to be buying from. C is where you want to be buying to, right? And B is some sort of a trap you shouldn't buy, like you shouldn't be buying from. Instead, you wait for market to come and take it out. Market to completely invalidate it, and you have boom to the upside. Now, the best way I usually use this, right, to identify this, I always have these scenarios I have, right? I always have these types I used to identify it, because it can be presented in any way. At the end of the day, we all know nothing is as straight as these lines in the market. It is all usually just I don't know, usually bent way somehow. It's always bent. You feel me? So the market is not entirely as straight as it might be presented with the trend lines that you see on your screen as at now, right? So definitely you will see it in different scenarios. There are times where, right, let me give you a little graphic representation of what I mean. Now, notice very well in this scenario that is here. Let me take this out. Alright, so notice very well here in this particular scenario. Yeah, there we have two breaks. Should I call them? Yeah, I want to call them two break of structures, right? We want to call this two breaks. There's a situation where the swing low, look at this, right? So there's a situation where you will have the particular swing, first swing being formed, right? First swing being formed. So basically, you expect market to come and tap you in and then go. You feel me? But the market comes and gives you the B first. It gives you a B that's like a little fake, a little trap where a lot of people fall from, right? Where people fall from, comes back and tap into your initial entry, right? It taps into your initial entry. You do not want to be you don't want to be at a situation where you don't want to be at a situation where you are here, this particular swing has formed, and you're like, oh no, I want to buy from this place, or I want to buy because you start thinking maybe your entry is somewhere down here, right? And you'll be, no, market is supposed to come and tap me in or some shit like that. No, right? You have to be patient, because patience is actually a trader's friend. So you don't want to be at the beginning, you don't want to be too early, and you don't want to be too, yeah, too early is the word. You don't want to be here, right? When market, you want to start buying from here, or you start thinking market missed your entry, as a result you start forcing trades or something like that. And you don't want to be at this point too, where you start thinking that market has left you, or the price has left you. So as you, oh, because price has left you, you now want to be doing it from here, you want to buy from here, not knowing that this was nothing but a trap. This was nothing but a trap. So you need to be patient. You need to understand that whenever an A is formed, according to the algo market structure, because that is really how it is being presented. It is not presented the way this basic market structure is. There is always the algo market structure there if you break it down very well, right? So the A, right, has to be formed. The C, which is your target, which is your swing high, has to be formed. But you need a B. You need a B. You need that B because it shows you where liquidity lies. Like I said, that will be explained in a later video, right? It shows you where liquidity lies, where there is money seated for smart money to come and take out. A lot of people's entry will be there. Plenty people's entry will be there, right? If you're able to identify that, trust me, it makes your trading very very easy. So here, this is like a first scenario. There are scenarios where you could have something like this, right? There's this A, then I'm not really the best drawer. Something, you have the B before the swing high even forms. Something like, I don't really know how to draw this very well. Please excuse me. I think something like this. Alright, pardon my drawing. I'm gonna get it right now. So there are scenarios where you have something like this, right? You have this little, structure right here, then boom, something like this, and then this becomes your swing, your new swing. This now becomes your new swing, something like this, and then and just like we know in the advanced market structure, we expect markets to give us the minor structure and sorry substructure takes out the B. It always takes out the B. Do not be in this trap, right? The B here takes out the B, then to the upside. Minor structure continuations, then there's a new swing, right? There's a new swing. That's what I'm trying to let you all know. I'm trying to let you all know something. Markets always come for the B. Always. Always comes for the B, right? Always comes for the B. There are even scenarios where markets would not even give you a B initially, right? You would even be when you come to the market here and what you are presented with or what you are presented in, like what you see at that moment in time is just a B structure. It's literally just the B. Like that is all you can basically see. You can only see the B. There is no something like this. Yeah, you would not know that there is a little structure, below. There is the structure below, and you'll be here waiting. Do not enter the market without the B if you're trading algo market structure. Algo market structure requires the B because market always comes back to take it. If there is no B, recognize that this is the B. If there is no B here, recognize, even if there are little structures in between, do not make mistake. This is the B, right? Especially when there is a structure below that has not been taken out. Let me explain this. Especially when there is a structure below that has not been taken out. Let me explain this, right? So let's say you come to the market on a very good Monday, very good Tuesday, as the case may be, right? And then this is what you see. This is what you see when you come to the market. You come, you see something like this, right? You come, you see something like this, but there is no B in this scenario, right? There is no B to be taken out in this scenario for you to place your entry. There is no B there, right? Just know that the place you are is the B. For on a greater view, right, this is mostly what is there. You enter the market, you will not know that there is a little structure behind. There is a structure behind that's not really taken out. Know that this is the B. This is the B, right? This is the B. So according to what we know from advanced market structure class of the last time, markets would come as a substructure, take out the B, right? Take out the B, tap into the structure which is the actual A that is here, minor structure till it takes out the C, right? This for me is how I understand the market structure properly, right? I know that market comes for three things. There is the A, where you are buying from. There is the B, where you shouldn't buy from because it's a trap. There is the C, where you are buying to. Or in other words, for the sell position, I notice I've not said the word, I've not talked about sell since. On the other side, the A is where you are selling from. B, where you shouldn't sell from. C, where you are selling to. Do not make any mistake about it. Do not get it confused, right? It is that simple. If you don't get it now, I'm telling you, with practice, with time, and that is the thing about trading. You have to be consistent. You have to be consistent. You have to practice. You need to back test. You need to back test for you to know what you're doing, right? If you, yeah, back test, basically back test, right? So back to the class, right? As I was saying, recognize where your A, your B and your C is. Your A is the swing low, your B is the trap, and your C is where you are buying to or selling to. Now one might ask, how do you identify your B? Me personally, if I'm buying, yeah, your B would always be in a visible V shape. If it is not present on the time frame you are dealing with at that time, when it is a single candle on that time frame, go to the lower time frame, you would see that it is a V shape formed fully, a V shape, right? Or if you are selling, it's going to be the other way around and it will be an A shape, right? Excuse me. Uh, it will be an A shape. So be sure to not get it confused. It will be an A shape. It has to be an A shape, a visible view of that A shape for you not to make mistakes and buy or get it confused. Basic market structure shows you that all we are doing is we come from the higher highs and the higher lows, right? Higher highs and the higher lows, and we just buy, just like I told you guys, you just come and buy and boom, right? Algo market structure rather teaches you that this particular spot you think is the right place, this particular spot you think is the right place you are going to be buying from is it's actually wrong because, right, market has to come out and take this trap out. It will most of the time takes it out. This, my dear, is your B. Takes it out, right? So it will look like something, it will look something like this when it takes it out. It look like this. This is how it look like. So this is the swing you were admiring yourself like, oh yeah, this is the right place to be. But then market comes and show you there is an actual swing below that has not been touched. That has nothing to do, like it has not been touched, and it is the right place you're supposed to come from. It's the right place you're supposed to buy from, right? That is where your eyes or you're supposed to be fixated on, right? So just have this in mind. Have this in mind. Recognize the fact that there is an A, there is a B, and there is a C when you're dealing with algo market structure. Algo market structure shows you that the A is where you're supposed to buy from, B is where you're supposed to avoid because that is a trap. Its liquidity is where the stop orders are meant to be taken out. Smart money does not stay there. Then the C is where you're supposed to buy to, right? With the knowledge of what we explained last time, right? This is your swing, this is your swing, right? Excuse me. This right here is your swing, my friend. This is your substructure. I know you remember this: substructure, minor structure, and swing structure. So that's your swing. This is your sub. This is retracement. Then this is your the continuations that happen here, lower time frame, whatever, is your minor until it fully forms and your swing. Now look at this. Look, this is what I'm talking about now. Now after that is formed, This is what you get to see, like this, right? Like this, right? That's your swing, right? So what do you look for? Wait for the B to be formed. Wait for the B to be formed. Now, once that B is formed, it can be formed in any way, any form of scenario, however way it presents itself. The B has to be there before you look for your buy, right? The B will be taken out, then boom. Same thing repeats itself again. Same thing repeats itself again. We have the swing structure that has been formed, right? You have something called the trap, the B. The B will be taken out. Again, do not forget I said it has ways to present itself, scenarios, but whenever I want to trade or whenever I'm in the market, this is my go-to. This is what I look for, right? This is how I normally see my things. This is my best way of identifying. For me, as my mentor said, this is high probable, right? It's high probable. It's more like the one you are really, really sure of. Market gives you this, right? It comes out, look at it, it breaks it, takes out the B, and boom, right? The other scenario I give to you is this. Why am I so inefficient with my drawings? I need to take classes, bro. I really need to take classes. I think it's something I drew it like this the first time. Something like this, of this sort. Yeah, I think this. Okay, hold on. My bad. Do not come for me. Aha, aha, yes. Exactly. Something like this. You see, it gives you the B before it goes to break, right? There are times it would not, the B would not even present itself at first. You come to the market, you don't know you are literally diving in the B. You are literally there, right? You are literally diving in the B. Now, as long as you don't see any B there and there is no substructure and there is like a structure behind, do not trade this, right? There is no B here, do not trade this. There is no B here, liquidity trap, anything to be taken out, like something like this, and then you can come, no, do not trade this. Even this presents itself, right? Even if this presents itself, always have it at the back of your mind that there might be a structure behind, right? Market comes, let me tell you now. So what I would say now might confuse you, right? I want to make this class as short as possible, right? What might say now might confuse you, but let me break it down. Market comes for two things. It comes to fill old imbalances, right? Or fill up gaps in the market, right? And it comes for liquidity, which in this case is being presented here. This, my friend, is liquidity, right? I want to call it as market coming to take out the trash. Market comes to the market, and market comes, fill up empty spaces. Yeah, let me call it that way, filling up gaps. Those are the empty spaces. Then their liquidity taking out the trash. Taking out, market comes, take out the trash. You do not want to fall in line where this happens. You do not want to be in this place. I will explain this, why this place is so crucial whenever you're dealing with the market. But according to Algo market structure and not basic, because we don't trade basic, right? This is what you're looking for, right? I know it's a little bit deeper, but take your time to understand, right? There is this scenario, there is a swing structure which fully forms when there is the B. So look at this swing structure, right? This is the swing, this is the inducement, right? So what is this called? Let me, just like we did it before, just like we classified it, where you are buying from is your A or your higher low, right? Where you are buying to is your C, which is your higher high that is going to present itself, right? And then where you are not buying from is your B, but it's a confirmation that zone, that where you are buying from is pretty strong, right? So the same thing applies when you're selling. When you're selling, you know where you're selling from, is your A, where you're selling to is your C, and where you're not supposed to sell from is your B. You need it. Now, let's go to chart example. Alright, now let's look at chart example. Listen. So this is EUR GBP, right? Sometimes I like to use the line chart because line chart gives me clarity. And besides, I don't even need to draw. You will see what I'm talking about here. Now, remember what I said? This is the higher high, higher low. A, B, and what? And C. You know what? Let's call this our C. Let's call this our target. Please give me a sec. Now let's call this particular place our target now, like our C. You will get to see something now. A lot of buyers will think, oh no, this higher high, and this higher low has been taken out, this particular place has been taken out, right? And they want to buy from here. Might have even been teased at some point, because like if you check it on the yeah, might have even been a little bit teased that okay, yeah, it's possible that there's a buy here, not knowing it's a trap. The market reverses on them, takes out the B. This is what I'm talking about. It took out the B, and then now look at what's happened. And now this is the A, this is the B that got taken out, right? Although this buy didn't last for long, but yeah, and it kind of like missed. But yeah, I expect market to probably come somewhere here, right? Come somewhere here, take this out, and buy it. But what's my explanation here? My point here is just like the ABC illustration I gave, right? It's right here. It's right here. This is the A, the B, the C. Just like I told you, very good two breaks, market came and took out the the B, and we had was the C taken out. I think there is another example that showed on gold. Let me go to the 4H. I think it was clearer there. I got a trade with this same analogy. It's like a month ago. Okay, so here's what I'm talking about here. There was the break that happened. There is the A, which is all of this. There is the A around here. There is the B, a lot of retracement here, right? A lot of retracement. A lot of people will have even thought this place is gone, and here, so I'm talking about the trap had happened. There was even another B that presented itself for this one. People must have fallen for the trap by being in this place, by being here, right? And must have thought, no, this is very good, and then boom, it dumped. It dumped and tapped into what? It took out the B. It took out the B. This was one B, this was another B. It took out the B, and look at what we have now. And the thing has happened over the course of like trades on lower time frames, on lower time frames, and it has been buying since. And look at the same scenario, but this time with a different structure. This structure is called an engulfing candle, right? So there is also the A here. I think I can actually use line chart to be clear. Okay, look at this. There's also the A here, which is a higher high and higher low. There's the B. A lot of people are caught in this B trap right now. A lot of people are currently trading gold, right? In this B trap right now, not knowing that the market is supposed to come down to this low. This is exactly what I'm talking about. A lot of people are caught in this B trap right now. It has been ranging for and consolidating for days now. A lot of people are caught in this B trap, right? Not knowing that market is supposed to fall down, right? So put it at the back of your mind. Always have it at the back of your mind, right? In algo market structure, you are always expecting for market to give you an A, which is your where you are supposed to buy from, or your A doesn't necessarily have to be here. Your A is basically your entry, right? Your entry, your higher low. Your B is liquidity, right? Where market is, it's a trap. It's a trap. It's like fake money, right? Then your C is literally your target. And at the end of it all, you properly derive your swing structure out of it. This is your swing structure. right? Your swing structure is right here. This is what you have as a swing structure. Then you have the substructures that comes, takes out the B, takes out the B, right? And boom, minor structure happening until another swing structure is fully formed, right? This is what you have. It takes out the B. It is that simple. That is how simple algo market structure is. Some people even have this tendency of being able to differentiate when or places they're expecting markets to start buying and selling from. They call it the premium and discount, but I don't trade premium and discount. I trade structure, liquidity, and key level. People use premium and discount to determine it. Some people use different POIs, but I use key levels, which we would explain later. So I believe that is all we have, or that is all I have on all you will need while you need to understand SLK, structure, liquidity, and key level, right? You need to understand market structure, right? Market structure, you know that it is highs and lows, but we are not just dealing with the basic one, we are dealing with algo market structure, where you know that you need somewhere market is buying from, right? You need to know how the market looks like in the first place, whether you are buying or you're selling. Then you need to have it at the back of your mind that this is where market is buying from, which is your entry, right? Do not fall for it. Where it is not supposed to buy from, which is the trap, the liquidity, then where you are buying to. As the case, the same thing reverses for sales. The same thing reverses for sales. Anyways, that'll be all for today's class. I'll see you in the next one.